if you ever wonder why you're getting stopped out and have pain afterwards or getting stopped out a lot, then this is the video I would wish to have before. So I collected a lot of data teaching other traders and also a lot of errors, and I put everything together into this video so that you understand like why it hurts to being stopped out and what is the thing with the learning first with the L instead of earning. So first of all, we're going through some example trades, and being stopped out is because there is mostly not a clear structure or a strategy that already works. We can either make a strategy, but I think the biggest scam is literally to try to make the profitable trading strategy without even trading profitable, and scam just means actually still confused about money. And the thing is that there are systematics that are already profitable, and when doing so, this is where the person goes from one stage just within weeks from unprofitability within a demo account to profitability. So it's very important to understand that even though we want to learn, that trying to improve ourselves, that sometimes just ourselves or is just not enough to meet specific standards. And this is the reason why watching other YouTube channels, informations, reading books about trading, getting information from someone else, being selfless and applying that can give us massive results. Because somebody who is already profitable, or for example this systematic, when we shift our daily habits with the strategy that we're doing right away into the other strategy, and we put our energy in, this is where we get, of course, other results, because it's about making different activities to get different results. This is very important. So when looking here, we have here two indicators. The one is a 1 minute chart, because when using a 5 minute chart and we just wait for 5 candles, this would be 25 minutes. While using a 1 minute chart, 5 candles would be just 5 minutes. Makes sense, right? So when I have here more than 3 green or red candles, that shows me that the market does pressure. And you can see here the market does here 4 green candles here in a row. And that shows that the market has pressure here inside into this movement that we see here. Because it does here all 3 green candles, and then here does one time 4 green candles. And of course, there will be a bigger retracement, because when I can see that the market does a retracement of this big, check this out, from here to here, I also expect the market is going to make a retracement from here to there. That makes typically sense, and this is the reason why this trader here entered the trade. But it was not good enough, because when the market is more in a contraction phase, I love to use the anchored VWAP, always placing it on the lowest part or on a mid rotation. Never placing it just like that. If I can see such big retracements, always placing it here, or like from a bigger movement on the left side on a low. And in this case, that once the market crossed, as you can see here, placing the anchor VWAP here, once the market crosses here, for example, I want now to see, can I see enough pressure that the market goes up? And what it just does go lower. Check this out. When looking here on the candlestick bodies, and this is very important for me, green, red, and then the next green, red, it goes lower. That means the market does lower highs. And every time the market does lower highs, it means that the market goes lower. So I want to wait until the market does higher lows. A higher low for me is red, green, and then red, green, that goes higher here, for example. This can be pressure for me and a good trade, that if I would enter here after the green candle, there's a countdown on the right side. And then the stop placement must be under this color switch, just like right away on this tip here. The stop needs to be tight as possible, because if I would adjust here $100, this would be a $500 take profit trading up here, or $400 minimum. And when the market reaches there, it also goes more up, because we can see the market is in a trend a bit, like it goes up. So here's the thing. The trader did say the enter here and not there. So this would be, for my opinion, a very good trade. The next trade, you can see it goes under the 1 day VWAP. I love to use the 1 day VWAP and the anchored VWAP, but in this video we're going to talk more about the anchored VWAP, because this is just very more simple to use, and you will have more opportunities. When there's a red and a green candle that you can see here, this color switch here, or with the doji in between, that's totally fine. The trader just entered here and it worked. But what I also like is that when it starts to make a higher color switch, not just a small green candle, like you will get a feeling to that with having more market experience, that this is just too aggressive. But from this red and green candle and this red and green candle, this is a higher low. Having a higher low There are two concepts how I love to read it. The first one is to have the red and green candle and the lowest wick, such as from here to here. The second concept is the candlestick body from here to there, and the candlestick body got lower, and this would make me a bit unsecure. But on the next higher low that you can see here, where it goes here higher, this is the entry then signal, and this would be the stop placement. Adjusting here $10 would be $50 up here. Adjusting $100 would be $500 here, or even $700. While on the other hand, this trader traded a very long color switch, and this is the reason why up here it is first having a risk reward ratio of 7. A high risk reward ratio starting 5 hours is for me very important, because when having a risk reward ratio starting 5 hours or having even greater, I can afford myself for each winning trade 5 losing trades. So that means my winning rate doesn't need to be by 5. It means that if I have $100 or $1,000 and I divide it into 10 $100 trades, because I want to build it as a business and want to make it for a living. If I make 3 times $500, that's $1,500. And if I lose 7 times $100, that's still $800 in profit. So I made out of $1,000 still $800, but just keeping to the systematic. And this is something what is very important to me, because it is not then about how can I increase, like being more right, how can I create better my stop placement or other things. If the systematic is in place, it's more about like how can I improve over the months and years to get more winning trades than losing trades, and how on of course like more length would be also good, having a greater risk reward ratio of 5 then, but it just takes a lot of effort. I think like the biggest source we have is energy, and if I can see always I take $1,000 and I can get 800 or 1,500 or just like $400 out, for me it is just size and to repeat. This is what is for me just the money making activity using the thing. So I'm going to show you now using the anchored VWAP and the candlestick bodies what I really love. That is literally that instead of having this problem here, how we get to a solution getting to this. And there's a simple solution here. So on the right side, we can see a very big contraction phase that the market has a hard time. On the left side, we can see the same. But the difference is that on the left side, the market starts to make here 4 green candles. The trader places the anchor VWAP on the lowest part. This anchor VWAP placement is sadly not right. I don't like this one. I more like this one, because it's from a bigger movement. And then the market goes in a contraction phase. And the good thing is the trader here was exiting the trade here. This was very good because he realized it was not good and the market goes in a hard time inside. And it was already foreseeable a bit up here that the pressure is not that big enough. But when placing the anchor VWAP down here, you can see now that there's a big retracement. And here inside, there's this color switch. Red, green goes lower, red, green goes lower. And this green candle goes higher than this green candle, as you see here. It goes higher. Just your 2 or 3 green candles afterwards, and then the third green candle is what the trader took, and this is totally fine, because if the market goes higher, a lot of green candles will work just to enter the trade, just any of it, because there will be 5, 6, 7 pieces of it, and the trader predicted that, what was very nice. Having a small stop placement adjusted here $100, and just had here $500 take profit up to this high. Sadly, the market didn't reach it, and this is totally fine. It's just like having more of these trades, quantity makes it. When looking now to the right side, I don't like this kind of trade because it doesn't have too much pressure. There are also 4 green candles, but when looking now in the market, and this is what the trader didn't do, the trader didn't compare to the left side and the right side what momentum looks like. Because what the trader would see is that the market goes into weakness. Into weakness means alone if the market does like that. Strength always comes from movements like that. So that makes this, if we can see the market goes up like that, of course, this makes it such a good trade here. But then afterwards, if the market won't come up here, the next buying trade, I understand what the trader did, but it's just too much weakness. It's better not to do that. It's better for me to let the market run up and then trade higher, because there will be many days the market is not going to do that. And this is going literally to save a lot of money, a lot of trades, not doing, because the market is not pressuring at all. So the market needs to prove himself to us. So the second thing is that what the trader saw is that the market was going here lower. It does here more than 3 red candles. As you see here, there's just a doji in between, but this can be also a red candle. Like a doji is not that powerful. It's not beautiful, but we can see that the market goes here very strong down. And what the trader did is the trader placed so many anchor VWAPs But instead of having the fixed rule set, and I hope you can learn this from this video, when just placing it correctly here on this high here, check this out, everything would have been maintained right. It's just like the trader didn't have enough experience, and this is totally normal. I'm going to draw you here this anchored VWAP line that you can see this one, and this is very important. Now, when having here placed the anchor VWAP correctly, I don't like this anchor VWAP too much, but as you see here, this anchored VWAP would have also worked good here, like that. When taking now any color switch of green and red, such as here, for example, or here the second red candle that I would like more because I can see more pressure, because it is more about sustaining to say no and to have more better signals, and that all comes with experience. Sitting down for 1 or 2 hours on a New York session using a 1-minute chart, this is the S&P 500, making always pictures and then comparing. And when you saw this 20 or 30 times, I mean, you will have enough experience to identify like what is right and what is wrong, and this will be very objective. So the thing is that you can literally see here that there are nice signals, and we can make our trading way more easier. And when entering also here to trade, it is also way more easier to manage the trade in that direction. And this is something what is very important to understand. It's that it's not that much the trade management, how can I manage my trades better? It's more about how can I get a better entry. So going to trading, we're using here the ES1 exclamation mark. For me is very important. Using the 1-minute chart, identifying where does the market has a contraction phase, where does it go extremely out in a direction. Like when it's in a very heavy contraction phase, the market will return very often. But once we can see through experience that the market pressures up here a lot, check this out here like this. Those can be very nice scenarios to place the anchored VWAP on a color switch. Very important. This is the lowest point, but this is a color switch where the pressure comes out. And then you can see literally that market touches and then goes away. Sadly, there is no trade. We always need to let the market push away. And then once the market pushes away, this is very important. From here, it pushes away. So this is the reason why to place here the anchored VWAP. Then the market should confirm here. If it doesn't confirm like this, and this is the reason why, because this is a very ugly contraction phase, it is hard to trade on these days, and we don't need like everything that is just like not that beautiful. We more need like beautiful trades, such as here, for example. You see here then the market does with 3 red candles, for example. It goes a bit down. Here does 4 red candles, so it shows us it has pressure. It makes us also here a lot of green candles, and this is the reason why it's not good to sell. But then you can see a lot of red candles the market does. And when placing now the anchored VWAP like on a high point where the pressure came out, you can see it just like holds itself below, and this is very nice, just like above, very short. And this makes it very hard because when seeing 4 green candles trying to trade above the anchored VWAP, there will be a lot of stop outs. But once the market goes below and does more than 3 red candles, as you see here, there's just this doji in between again. We can also place the anchor VWAP here, by the way. You will see here nice confirmations either here, or check this out here. And any small color switch, just like a green and a red candle, entry here, stop placement here. That the stop placement is above the anchored VWAP, that we aim here for this low here, gives us a risk reward ratio of 9.2, and that's already enough. Hope you could take something out. This is one trading strategy. Just imagine, if you take all these seminars or courses or whatever you do, later on, for me personally, it's just this one trading account, this one trading routine, and putting all energy and effort in that. But first of all, and this is the reason why our trading sucks in the beginning, is because we first try to earn instead of learn. So they removed the L too early. It is literally learning first for several months to duplicate it to a $3,000 account using a demo account. Hope you can take something out of this one. Subscribe to this channel. You can also look on my Instagram account, TraderJT Wrong. You find there also some videos. Wish you all love, good trades. JT out.